Brutal, just absolutely brutal. That's the best way to describe the stock market, and I think I speak for all longs. An absolutely brutal market we have going on. A lot to talk about in today's video, guys. A lot of stocks to go over. My feelings, where I'm at in the market, moves that I made today, which there was a lot of moves I made today, and outlook. I mean, we're going to get into a lot in this video. Hope you guys enjoyed. As always, thank you for everybody that's subscribed to the channel. So absolutely brutal this market is. You know, you're looking at a stock right in front of you right there in AMD that's one of the most respected stocks in the stock market, one of the most well-run companies, one of the most impressive turnarounds I've ever seen in corporate history, to be quite frank. And this stock is now down almost 60% year to date. Let's just call it 60%. It's basically right there. 60% year to date for AMD, down another 10.5% here today, just getting absolutely obliterated. You know, when it comes to AMD, the situation for them is very, very bad in the short term, and I mean very, very bad. They just missed quarterly numbers by $1.1 billion, which was over a 20% miss in terms of revenue. And you know, in terms of their next several quarters, to be quite frank, if I had to guess, they're going to be very, very bad. And so this is a disastrous situation in the short term. Do not forget that AMD is obviously a great company long term. It's not a stock I personally own, but I actually might be interested in getting in it sometime soon. But when it comes to this one, you know, don't confuse what's going on short term with where this company's going long term, right? It's an amazing company that builds some of the best products in the world, and obviously done a great job expanding their business. They are just going to be in a really, really tough spot in the, let's just call it, for the next several quarters when it comes to AMD. And this market's such a brutal market that it goes way further than AMD, right? It brings down a stock like an NVIDIA, right? Another phenomenal company. I mean, this one's down just about the same, around 60% year to date, and down another 6% plus today. They didn't announce anything. They didn't announce bad numbers. They didn't say anything was bad, right, today. But you got to understand, when a stock like AMD reports that, everybody assumes NVIDIA's numbers have got to be really bad as well. And this is just a very dire situation for the kind of the whole semiconductor complex, but especially obviously anything dealing in relation to the PC market. And there's a lot of, you know, belief that the PC market's going to be down in a significant way for the next 6 to 12 months, to be quite frank. And if that's the situation, obviously it's not ideal for companies like NVIDIA, AMD. If you're talking about big corporations spending less, this is very, very important for everybody watching this, okay? If you're going to talk about companies watching their capital expenditures over the next year as well, or next 6 to 12 months, let's call it, why times are uncertain, then that could mean even their, you know, products that maybe go into cloud computing and things like that have weakness over the next, you know, 6 to 12 months. And so, and then you add on, obviously, crypto's in not a good place right now, as we all know. So across the board, companies like AMD and NVIDIA are just in a bad place for the next 6 to 12 months, right? But once again, do not confuse what's going on short term with what's going on long term for those companies. Intel is as well getting hit. This one's getting pushed down to pretty much a new 52-week low here today, if not multi-year low. This one's down about 5%, and Intel just can't buy a break right now. Just bottom line. It's interesting, after this fall today, now Intel has once again a bigger market cap than AMD. The thing is, it's just like, which stock is crashing faster? And as of right now, it's AMD. It's winning the race of the crash, right? NVIDIA is right behind, and then you got Intel right behind. But all these stocks, you know, the other ones are 60% down year to date. Intel's still a disaster. That's a 51, almost 52% year to date. Incredible moves when you take into account how big these corporations are. You know, with NVIDIA, it's several $100 billion market cap. With obviously Intel, it's about $100 billion. With AMD, it's about $100 billion. And to see them down this significantly is definitely a year for the record books. Let's just call it that, a year for the record books when it comes to these stocks, right? If we didn't have enough bad news, well, this report came out while I was prepping this video. FedEx to lower volume outlook on expectations of slower holiday season. That's a report. We'll see what happens there. Not an ideal situation. Obviously, if you want to know companies that have great insights on what's going on in the overall economy, companies like FedEx come to mind. Companies like UPS come to mind, right? The railroad operators obviously come to mind, like Union Pacific and the others, right? So this is not good news if you're thinking about the economy. And but once again, it gets into what's the numbers? Is it like maybe 2% worse, 4% worse, 6% worse? I think that's going to be the important thing, is to understand like what's the actual numbers behind that. FedEx is a stock that's been absolutely devastated this year as well. Okay, you look at a stock like Lyft. Lyft is at $12 a share here today. I mean, the stock's down 72% year to date, down another 10% here today, roughly, for Lyft. Just it can't find any hope, in some of these stocks, and that's pretty unbelievable, just to be quite frank. And Uber's a stock that's been hit as well. As far as what do I like better, Lyft or Uber? I like Uber better. But man, some of these stocks are just getting compelling at this point in time. It's just like, holy smokes, man! This is a problem with a crashing market. There's so many stocks get so discounted. You start to kind of be like, man, where should I go? What should I buy? Because if you just look out there, the amount of true quality companies that are down 50% plus year to date, right, 10 months into the year, is incredible. And that's where it gets into like, where's my best risk reward in these, right? And obviously I was plugging some money out there, and I'll show you kind of what I'm thinking. But Tesla, down 5% here today, now down 43+% year to date. It just feels like this is a stock that wants to go 50% down in a sea of 50% down year to date, or 50% or more, right? It seems like Tesla wants to go there. And with the whole Elon Twitter drama, is it possible that Tesla could go there? Absolutely. It's possible that Tesla could go there. Regardless of what's going on in their business model, you got to understand, right now, what's going on with business models doesn't really matter, to be quite frank. Obviously, that's what I always love to focus on, and as a long-term investor, that's what we love to focus on. But the market doesn't care. The market doesn't care about Cybertruck. The market doesn't care about Model 3 or Model Y or anything. It doesn't matter right now. All that matters is Tesla's a higher valuation name. There's a potential risk out there with the whole Twitter and Elon Musk situation, and potentially Elon selling shares, and we're in a risk-off market. In that sort of market, just Tesla has kind of no chance, right? And that's what we're dealing with in the short term, right? WTI, unfortunately, is climbing, which is more devastating news to this market, which makes it even more brutal. And I do think, like, where would the S&P 500 and where would the Dow be if it wasn't for the fact that energy has been kind of roaring this year, right? And obviously it's down substantially from the highs, but it's been kind of an elevated year for energy. And I think if it wasn't for the fact that energy stocks have held up so well, we could be looking at an S&P 500 that was down 30% plus as well, to be quite frank, this year. But in terms of energy, yeah, it's climbing like crazy, obviously, this week, specifically off of that OPEC news. But I wouldn't trust any rally in WTI. Remember what they were telling us in the summertime. Oh, WTI was going to keep pumping, no pun intended. And, you need to be in the oil and gas plays. And what happened? Just devastation across the board. So short term, it's obviously got a lot of excitement when it comes to oil because of the whole OPEC reduction there. We'll see if that translates. I wouldn't trust any rally in WTI, to be quite frank. I also wouldn't trust any rally in these stocks here you're seeing in front of yourself, housing stocks. Sometimes these will go green, and I just laugh at it. I'm just like, I don't think those stocks have anywhere but down to go for at least the next 6 months, probably, to be quite frank. I think there's a lot more devastation that has to happen there. I think when people realize how bad the real estate market really is, I think that's the moment that these stocks take their next leg lower. And I don't know if that's in a month from now, or 2 months from now, or 4 months from now, or 6 months from now, but eventually, the truth's going to come out around housing and how bad it's truly getting in housing. And the fact that housing could be in a bad place for at least all of 2023, to be honest, and maybe even into 2024. So just because, by the way, housing could be weak doesn't mean necessarily stocks will be weak. Those can completely diverge, as they did in the great financial crisis. Now, at this point in time, the Nasdaq's now down back 32% plus year to date, which is just a devastating number, obviously, just nasty. We'll see what happens next week. We still got a few days before the market kind of gets back on fundamentals. Essentially, on, if I recall, Wednesday, with the 13th of October, we have CPI coming out. We'll see what happens there. If it's under 8, then I wouldn't be surprised if we start going risk on. If it's still in the 8s, I wouldn't be surprised if we sell off harder, to be quite frank. And then we have JP Morgan earnings the very next day. So I think actually CPI is on that Thursday. And then Friday morning, we get the JP Morgan earnings. And then after that, we get the gauntlet of earnings for earnings season. So that's going to be, obviously craziness. And that will get the market back to fundamentals and people actually paying attention to earnings and what's going on with companies and things like that, which is going to be an important moment for the market, because right now the market's focused on anything but that, to be honest, okay? And I just don't think that's healthy, okay? Now, in terms of me and buying, I did a lot of buying today. So I bought Revolve stock here, I bought Honest stock, I bought Chef stock, I bought Shopify stock, I bought Palantir stock, I bought Oatly, I bought Meta stock there, okay? Then I bought some Planet shares, I bought more Meta stock, more Palantir, more Oatly, more Chef, more Corsair, Honest, and I actually bought some Fubo in the public account for the first time here today. These are public account moves for that are right here. Now, in terms of buying for today, that's probably about it for me. I'm recording this while the market's still open, several hours still left. I don't know. We'll see if the market takes another big leg lower. I might do some additional buying here today. Pretty big buy day. It's the VIX isn't going crazy today, but it feels pretty down and out and pretty brutal, just to be honest. And you can have those sorts of days that almost feel like capitulation, even though the VIX isn't necessarily spiking. And I feel like today's one of those brutal kind of capitulation type days where we are seeing these moves in these stocks that's just unbelievable. And some of these stocks didn't even announce anything, and they're down 6, 7, 8% today. That's just a brutal day overall in the market, right? Now, if we were to go back in time, obviously in the tech bubble crash in the market, right? You had obviously a pretty long amount of time. You had actually a couple of years to be a buyer, right? You kind of had the first big fall right here. You had nearly 2 years to pretty much be a buyer out there in the market and continue to buy the dip, right? And you had some months and sometimes several months that were kind of up, right? And then down, and then down. And so that lasted for about, honestly, 2 years, in terms of if you were to basically kind of take from right here to the lows right there. That's about 2 years roughly. Now, in the great financial crisis, you had about a year and a half roughly of pain there, somewhere around there, a year and a half, maybe a little less than a year and a half of pain, right? And so, in this market, we've basically been, it depends on what you're looking at, right? If you're looking at small caps, we've been in pain for over a year and a half. If you're looking at large cap stocks, it's really been pain for this year, so you can call it 10 months. Or if you want to take from November, where a lot of stocks kind of peaked out at, then you can say we've been in almost a 1 year of pain now, or 11 months of pain, something like that, right? So we're on track to kind of be in where you usually are for a painful kind of crash, right? Now, when you're in one of those crashes and you're a buyer out there in the market, right, it can get very tiring. And that would describe my mental space right now in terms of my view on the market. I am just very tired is the best way I could put it. And, I've been just a consistent buyer this year. And these markets are very tiring, man. These brutal bear market, crashing markets, it looks easy on surface of like, hey, stocks are crashing, just buy. But when you're actually in it and you're doing it, it is brutal and it is a very, very tiring, okay? Now, if I had it my way, what would happen is we'd get the November, December rally. Stocks would go up and up and up. I could take that moment to cash up a bit and take a breather. And when you're in one of these crashing markets, it's kind of similar to like a long distance race or a marathon or something. Sometimes you just need a chance to catch your breath, right? Or call it a boxing match. A 12, that's the best way. I've called it a boxing match this whole year, and you got to be ready to fight the fight till the end, right? It's a 12-round boxing match, and you need that breather for that 60 seconds in between the rounds. And that's the way I would describe it, is I'm kind of hoping for a November, December rally so I can get a breather going into 2023, and then we can figure out, okay, is 2023 going to be messy or what's going on? Because remember, going into this year, 2022, the outlook from basically everybody was this was supposed to be a decent year for the market. to be quite frank, right? If you go back to November, December, there was a lot of good vibes. Hey, 22 is going to be a year of opening. There was a belief that inflation was going to be transitory at that time, right? And there was a belief that from most out there, even on Wall Street, almost everybody was in the belief that 22 was going to be a decent year. And we didn't get a decent year. We got a disaster year. It was a different D. It wasn't decent, it was disaster. And therefore, everything got basically, as soon as the year started, just absolutely obliterated, right? And, at first it was hard to come to grips with that. And then it looked like, okay, maybe we could get back on the right track, and then Russia-Ukraine happened. And that caused a massive mess in the energy market, obviously, and a massive mess in Europe, and then took the risk of recession. It took the risk of the Fed continuing to raise to levels that we haven't seen, honestly, in over a decade, to be quite frank. Because of that situation. If it wasn't for Russia-Ukraine, we would probably, I wouldn't be surprised if this year ended up turning out to be a positive year. But the devastation that took on Europe, what that has caused to things like the dollar skyrocketing, obviously, any of the European currencies are just, insanely low versus a dollar, which caused a whole host of earnings problems for companies. Energy costs, went through the roof, which caused companies' margins to get hit, which caused an even weaker environment, caused more uncertainty, caused so many problems, right? And therefore, we had obviously, right after that, the market just obviously got devastated into June. We came back a bit, and just to get kind of devastated again in this whole situation. Now, the other thing that could play out is that November-December rally never comes, right? Which would be very surprising to most folks because, there's definitely a belief out there that we're going to get that rally, right? They usually do in those midterm years. And now, but the other possibility here is you don't get that, and you just continue to get devastation, and earnings are weak, and people continue to get scared and things like that, right? Which I could deal with that. That would mean, obviously the S&P 500 pushes down a lot more. That means the NASDAQ would be down something like 40% year to date if we continue to push the market down even in November and December, and we probably finish the year at a down 40%-ish type NASDAQ number if that scenario played out, which would be one of the worst years in NASDAQ history. If not the worst year in NASDAQ history, like that would just be, pretty darn epic, to be honest, if you're down 40% plus there. And then there would be a situation where I could probably take a breather in 2023 because I would call it a very high probability that there would be a nice bounce back in 23, even starting in early 23, because we just had priced in so much at that point in time. And even if we are in recession at that time, there'd be full faith that the Fed is going to start helping out the market versus hurting the market. And you go from fighting the Fed to the Fed helping in that sort of situation because you would have real devastation. As far as what do I think is a more realistic scenario out of those two scenarios, I think the more realistic one is we still get that November-December rally, and then 23 we kind of figure out where the heck we're going. And, maybe we potentially have some weakness in early 2023 while we still try to figure out where earnings are going when companies report at the end of January and into the beginning of February. I think that's definitely a scenario that could play out there. I think that's a more realistic scenario than I just continue to crash throughout the fall. But we'll see. I'm kind of ready for either scenario. I would just describe myself as pretty tired right now. When like I said, when you're handling one of these bear markets, one of these crashing markets, and you're buying, it wears on you, man. It really wears on you, and you just kind of get sick of buying the dip, and you just like throwing money at the market, and you get almost no positive return short term, right? It's only down. And when you're in a normal market, it's like some stocks are going to go up, some stocks are going to go down. You can deal with that, but you get some like positive affirmations there of like things are going right. In this market, you don't get any of that. It's just like you buy and then it's lower, and then you buy and it's lower. And look at a stock like we started out the show with, right? AMD. You could be a lover of AMD. And you're like, oh man, we dipped down to 120. Boom. awesome, I need to buy. And then you dip down to 100 and you're like, oh shoot, I need to buy more. And then it dip down to 80 and you're like, oh, I need to buy more. And then 70 and you're like, ah, this is ridiculous, I can't go any lower. And you buy more. And then 60 and you're like, what, are we going to the 50s? That's what happens, guys. So yeah, anyways, hope you guys enjoy this. As always, appreciate you joining me, and thank you for everybody that subscribed to the channel. Much love as always. I appreciate you. A little tired. If you're looking to say hello to me, say hello on IG, and have a great day.